Yeah. Hello, welcome back. And this is now the second part of our small video on chain transactions in value-added tax. Last time we spoke about what the definition is, so what the chain transaction is and how you can recognize it. And now, naturally, the topic will be how to deal with it. The way is basically just common sense. There are nearly no special rules needed. Only one or two details have to be precised or regulated by law in order to clarify the one or other situation where two different solutions of use could be taken. And there is also one special rule which wants to simplify and avoid some bureaucratic or hurdles. So the core problem which you have, as always with deliveries, is when you analyze a delivery in value-added tax, you have to determine from which place the good starts and to which place it goes during each delivery. So let's try to explain by examples first, and then we can afterwards conclude things or express things in a more abstract way. So you probably remember, that's a lie, I know. You probably remember example one from the last video. That was A from Aachen, had a contract with B in Bonn, and he had in turn a contract with C in Chemnitz. And now that shows us we have two different contracts, so two delivery obligations. A does the transfer of the good immediately from Aachen to Chemnitz, so from the first to the last person in the chain. That makes it a chain transaction. So that's the guy who makes the transfer. Now, common sense says us that if somebody has an obligation, he sells B a good, then he is obliged to give ownership in that good to B. So he has to hand over that good to B. And that's what he does, even if he drives to Chemnitz. Civil law says, and that makes the whole thing normal without any complication. Civil law says you don't need to demand that a good is brought to your home. So B can also say, I don't need that good at Bonn. I need it at another location. So please bring it to Chemnitz because I like it to get it there. So the both can agree on we bring it to Chemnitz, and there I hand it over to you to B. Now that's what A does. He brings the good to the place which the customer has determined and where they have agreed on. The delivery A to B, so that's where the good goes from Aachen to Chemnitz. And now the next thing is that delivery number two can only take place after delivery number one has ended. So, but when delivery number one has ended, the good is already at Chemnitz. So when delivery number two can begin, that's only where the good is already at Chemnitz at the address of C, and there it can stay. The ownership just hops over a small second. So you must imagine, and then it stays at Chemnitz. You must imagine that this way. B said, bring the good to Chemnitz because I need it there, not in Bonn. And there, I will not be there in person. And there will also be no employee of mine. But under civil law, I can give the power to act in my name to everybody, even if that everybody doesn't know. I can appoint everybody as my legal representative who acts in my name on my behalf. So bring it to Chemnitz, ring the doorbell of C, knock on the door, tell them you come from me, and tell him to accept the good. And when he signs that he got it, then your delivery obligation to me, to B from Bonn, has been fulfilled. Okay, good. At that moment, when C signed, let's say 3 o'clock in the afternoon, at that moment, the delivery obligation to B has been fulfilled. Now B can begin with handing it over to C. Because under his contract, he is obliged to hand over the ownership now that he has it to C. Where must the good go in order to fulfill that obligation? Well, to C's address into the hands of C. There it is already at the moment. So this can happen very quickly. And there is no movement of the good necessary. It is at Chemnitz, it stays at Chemnitz. That makes this a so-called delivery without a movement, a passive delivery, or however you call it. However, that shows that determination of from where to where goes the good at which contract is basically determined by common sense. You will also remember example number 2. Now the last customer, that was C from Chemnitz, does the transport. So we have A in Aachen, B in Bonn, and C in Chemnitz. And you see he's already gleaming of joy because he's going to do the transport. So one contract, second contract, so 2 deliveries have to be made. And the transport is done by C. So C goes to Aachen, knocks on the door of A, says, you have something for me, give it to me, and he carries it home. Now, as he does the transport, we see he's involved only in transaction number 2. He doesn't travel across the world or from Chemnitz to Aachen just because of the interest of other people. He does travel there in order to fulfill his own purchase contract. So under civil law, what basically happens is C made a purchase contract with B from Bonn. And now they agreed B doesn't send him the stuff, but C can come and carry it home on his own. So B said, I place that somewhere at your disposal. You can knock on that door, you can get it, you carry it home. And now you can even agree that B has not the obligation to place that at Bonn. He can also agree on any other place. So he said, probably that's the agreement, drive to Aachen. There, at a given address, which I tell you, then you can knock on the door, tell them you come on my behalf and or with my permission, and they shall hand you over your good. Then you can carry it home. So C goes to Aachen and back in order to carry his own good from the place where his supplier B provides him with that good to the place where he needs it. So that means the good is at the beginning at Aachen and it stays still at Aachen. And when he begins to carry it from Aachen to Chemnitz, that's already transaction number 2. Why did I conclude that transaction number 1 happened in Aachen? Well, when he begins to travel, that's already transaction number 2, contract number 2. Contract number 1 must have been fulfilled before. And at the end, or if at the beginning of contract number 2, the good was still in Aachen, then it must have been there already still at the end of contract number 1, and it was there in the very beginning. So during the whole time before contract number 2 started, the good was at Aachen and remained at Aachen. So ownership can only have changed from A to B at Aachen. So that's why we get this sketch here. So C does the transfer because he wants to bring his own good, which he purchased, from the place where he got it to the place where he needs it. So the transfer is delivery number 2, basically. So during delivery number 2, the good goes from Aachen to Chemnitz, and logically, delivery number 1 must have happened previously. So that happened at Aachen because the good was at the end of that transaction still at Aachen, and in the very beginning it was at Aachen too. So this logic can be applied to other constellations of chain transactions. So nothing is different for the determination of the movement of the good if we have an export to a third country, or an importation for a third country, or something delivered from one EU state to another one. So let me illustrate that with a few examples. Now, example number 3 is now a new example. That's a so-called Reihengeschäft. In German would be the German word, so that you also learn some German. I come from Germany. So chain transaction from German inland to third country, Drittland. A from Aachen sells a machine to B from Germany for 100,000, and B from Berlin sells this machine then to C from Chur, that's in Switzerland, for 180,000 euro. To save transportation costs, B agrees with A that now we have variance. C can come to Aachen, take over the machine there and carry it home to Switzerland, or A sends the machine directly to the address of C in Switzerland. What happens, depending on the variance, is following stuff. 3-1, that is A, B, and C have contracts, and C does the transport. So we have this contract and this contract. These are the 2 deliveries, because you remember, everybody can only deliver a good or make a service to his own contract partner. That's never written in the law, but it's a very good thumb rule, which, to my experience, fits in 99.99% of the cases, and the very, very few cases which might be a theoretical exception from that rule might exist in theory, but in practice they would not happen, or they would be considered an abuse. So this is a very good sample, and that leads us to our sketch. Now we have to ask, if C travels through the country, which of the 2 deliveries is that? And now he just traveled through the country because he wants to go and take over the good which was purchased by him from B at the place where B said you could get it, to the place where he needs it. So the travel is just the execution of contract number 2. So the movement of the good during contract number 2 starts at Aachen. It ends at Chur in Switzerland. Logic says that the delivery of A to B must have been executed before delivery number 2 can start, because B can only hand over ownership after he has got it himself. So the good must have hopped over already to B before C began with the transfer. And that's what we know. To sum it up, transaction B to C is a tax-free export. That is something which we can see now from the movement of the good. And the first transaction, that's something which we can also clearly see. The good is sold, it stays at Aachen, and it is at Aachen. So no import, no export, nothing. Regular inland transaction, fully liable to tax, because no export exemption, because during this transaction the good does not yet leave the country. Variant 3.2, that was same sequence of contracts, but now A does the transport, the first guy in the chain. These are again the contracts, but A now does the transport. Why does A carry good and travel to a destination somewhere in Switzerland? Well, because he has a contract with B, and that contract contained the agreement, please bring that good to Switzerland, hand it over there to somebody who acts on my behalf. That's a guy called C, and you find him in Chur, Switzerland. So when A begins to drive to Switzerland and until he arrives there, what he basically does is he executes his contract obligations under contract number one. So beginning to drive in Aachen and stopping only in Switzerland is just the execution of contract number one. So during contract number one, the good goes from Aachen to Switzerland, and contract number two can only begin afterwards. B can only hand over a good, a machine, a car, or whatever it is after he has got it. So after the arrival in Switzerland, then B can hand over the machine to C, and so the machine is already at the final address when that can begin. So it is in Switzerland, it stays in Switzerland. So second transaction has no movement of the good anymore. So what we know is now when we look to the sketch is that now the transaction A or B is a tax-free export because the good leaves the country during that transaction. And that's the second transaction. B2C happens in Switzerland completely. So Switzerland is not an EU country, so it's not taxable at all. You can even now consider constellation the other way around, importation cases. A from Albania sells the machine to B from Berlin for 100,000, and B from Berlin sells this machine again in turn to C from Cologne in Germany for 130. B agrees to C with C that C goes to Albania, takes over the machine from A and carries it home. So the last guy in the chain does the transport is again variant number one. And variant number two, no A from Albania takes the obligation to carry the machine into the territory of the EU, hand it over to C in Cologne. So the machine in both constellations never sees anything in Berlin at all. So let us first have a look what happens first. C does the transfer. So we have a chain of transactions. A from Albania, because that is chosen just because it's a third country, and makes a contract with B in Berlin, and B sells on to C in Cologne. C does the transport. So C travels to Albania, takes over the good, carries it home to Cologne. But the contracts are A to B and B to C. So yeah. If we analyze why C goes to Albania and back, that is just because he wants to execute his purchase contract. So what is contract number two? Contract number two is just the travel. So during contract number two, the good starts at Albania and arrives at Cologne. That implies necessarily that contract number one must have happened previously, so was in Albania the good and stayed in Albania. So now we have the sequence of the places where the good went to during this chain of transactions. So we know now the transaction between B in Berlin and C in Cologne is a transaction where the good is moved under 3.6. The place of delivery is normally under usual rules where the movement of the goods starts. That would be in Albania. That is not in the EU. That would mean it's not taxable. However, if a good comes during a transaction from a third country into the territory of Germany, into the inland of Germany, then the place of delivery is in Germany under the condition that the deliverer pays the VAT on importation, 3.8 USDG. However, the deliverer would be B from Berlin, but in my case description I said C brings the good into the inlet, so C carries the border, so C will pay the importation VAT. and that means 3.8 does not modify the place of delivery. It stays Albania. So the transaction number 2 is not taxable at all. And for taxation number 1, the conclusion is very simple. It's a transaction without movement of the good. 3.7. The place of delivery is Albania. That's again not taxable because Albania is not in Germany and not even taxable somewhere else in the EU because it's not EU. Okay, so let's practice. Next variant. We have the same constellation of contracts. Now A does the transport, and that means when A drives and does a transport, what A does, he executes his own contract, his own sales obligation towards B. So he delivers to B, to the place which B named, that's Cologne, and B delivers afterwards. So then the good is at the beginning already at Cologne and stays at Cologne. So that means the transaction between A and B, during which the good is moved, is there. The place of delivery is there where the movement starts. We test 3.8. That is if the deliverer pays the importation duties when crossing the border, then the place of delivery is shifted to the inland of Germany. That evidently is the case, as the case description says nothing different. Because, you know, the basic rule for customs duties is who crosses the border with possession of the goods has to pay VAT if he cannot prove that he acts as a representative of somebody else. And if A carries the good across the border, then A will have to pay the VAT on importation. That triggers 3.8, so delivery number 1 is now taxable in Germany. And the second transaction, B to C, is Cologne and stays in Cologne. That's clearly taxable and liable to tax in Germany. Number 5, situations within the EU. Now we naturally need to modify the places where the people live a bit. So A from Aachen sells to B in Bonn, and B in Bonn sells on to C in Cordoba. That's in Spain. Variant number 1 is again C, travels to Germany, knocks on the door of A, says that B has already told you that I'm going to come. Here I am, please give me the good in question, and I take it home to Spain. Well, the variant number 2 is A, B, and C agree that A sends the machine immediately to C's address in Spain. First variant, C from Spain comes and carries the good home. And here we have the constellation. Then if C travels around, that is because he wants to execute his purchase. So it's his purchase when he travels to Aachen, takes over the good and carries it home. That means logically that the first transaction must have already happened. That is, ownership hopped over from A to B immediately before transaction number 2 began. Now we see that transaction number 2, Aachen and Spain, there is an internal EU border between the two places. So the good goes from one EU state to the other here. What we know is the transaction from B in Bonn and C in Spain is evidently a transaction where B has an intra-community delivery and C has an intra-community acquisition in Spain, under the condition naturally that C is an entrepreneur. Otherwise we would have a distance sale. The first transaction, A to B, is completely within Germany, nothing special, simple inland case because the good doesn't leave the country during that transaction. Variant number 2, A, B, C again. Now A does the transport, so he delivers to his customer in Bonn. However, the customer in Bonn demanded that he brings it to an address in Spain and hands it over to C. So delivery number 1 now goes from Aachen to Spain, and B to C happens in Spain and stays in Spain. So here's the border now crossed during transaction number 1. So what we know now is A to B is now an intra-community delivery in Germany, and B has to declare and pay tax on an intra-community acquisition in Spain. And B to C then is an internal domestic Spanish inland transaction under 3.7, so clearly taxable and liable in Spain. So when you apply basic logic to a well-drawn sketch of the contract situation, you can easily find out what happens, at least in all these situations here. So just common sense, as I told you. A from Aachen orders a machine from B in Berlin for a price of 300,000. B in Berlin has this machine not in stock and orders it from C in Cordoba, Spain for a shockingly low price of only 100,000. A from Aachen drives to Cordoba himself, takes over the machine, drives it home to his factory in Aachen. And the other variant is C from Cordoba sends the machine. So let's illustrate what happens in 5.1. Customer C from Spain does the transport. See now the people are in reverse order, and well, this is wrong again, a typo. It's customer A from Aachen who does this transport, so the headline is wrong. There should be just customer A from Aachen. Sorry for the mistake, but the rest is correct. So this is the constellation. And evidently when A travels, then his delivery begins in Spain. There he takes over the good which B furnished him and brings it to the place where he needs it. That's Aachen. So the first one must have happened in Spain completely. And here we have an internal border. So that now implies that B delivers from Spain to Aachen intra-community delivery and intra-community acquisition. And the first transaction is completed within Spain, so a passive or delivery without movement of the good. So, okay. What if A does the transport? No, seller. C. Again, the same typo. Sorry, copy and paste is a pestilence, you see. You correct me. So C does the transport. The seller. C does the transport. Oh my God. Let me. Okay, now it should look better. So the first seller C does the transport. Typos are pestilence, really. So Cordoba, Berlin, Aachen. C does the transport. So C transports from Spain to Aachen. Aachen happens afterwards. So here we have again the border crossed. So C to B is now the transaction where the good is moved. The good goes across an internal border. That means IC delivery in Spain, and B has IC acquisition in Germany. And the second transaction is completed within Germany without any movement. Now let's think about a small challenge. Sometimes that happens in real life. So let's imagine there's A GmbH in Aachen. They order a special technical device from a certain B GmbH in Berlin. And now they get an invoice from B GmbH in Berlin. Naturally, it arrives at A GmbH. They demand a price of 1,000 plus 190 German VAT, 1,190 in total. However, when the guys in the bookkeeping department of A GmbH look to the package, then they see the package came from Brussels in Belgium. There's a label B GmbH and Co KG is sender, Brussels, Belgium, to the address of A GmbH in Aachen. So they are a bit confused. They see that the good which they got came from Belgium. So they think it should be an intra-community acquisition that they have, and it should be tax-free for B GmbH. And B GmbH therefore should have not charged VAT, and now they fear that if they try to treat that VAT as input VAT, it would be illegal, because they think if B GmbH charged us VAT, and that's wrong, then that would be a case of unjustified, too high confirmation of VAT. So 14C case, B GmbH would have to pay it, and they can't deduct it as input VAT until the whole thing has been correctly corrected. Now the question is, are their doubts justified? So let's look at the solution. We have a contract B GmbH to A GmbH. Here it is. And that sells to. But the package, the sender, is B GmbH and Co. KG. That means under VAT rule, we must now wake up, because a partnership in VAT is regarded as a person or an entity independent and different from the partners. So if there is a B GmbH and Co. KG in Brussels, that's something different, that's someone different. So we have another person involved, B GmbH and Co. KG. They did the transfer, but they don't have any contract with A GmbH. If the accounting department of A GmbH was right in reading their papers. So B GmbH can only come into the question, into the scenario, if they have a contract with B GmbH in Berlin. So then we have a sequence of contracts. So a chain transaction, because B GmbH and Co. KG send the package immediately to A GmbH. And then, as B GmbH and Co. KG made the dispatch, the movement of the good, during that first transaction, the good went from Belgium to the final destination at Aachen. And so that was the first one, and the second one, B GmbH to R GmbH, can only have happened at the address of A GmbH subsequently. And so that means during the first transaction, the good crossed the border. So it was B GmbH who had an intra-community acquisition, and the following transaction of B GmbH to A GmbH was then correctly taxed or treated as a fully internal, inland, not tax-free, but fully liable transaction. So the VAT was correctly charged, and A GmbH can correctly claim it as input tax deduction, naturally. Okay. So what we can sum up as first results of our thoughts. How to deal with chain transactions. First, as always, make a list of contracts. Who has a contract relationship with which other person? Then look who makes the transfer. That person executes his own contract obligations. So it is always this contract where the good is moved from the starting point to the final destination of the transport. And you must now remember, naturally, that everybody always makes deliveries to his own contract partner, not to others, even if others are physically involved in the handing over of the goods or so. They only act as representatives and on behalf of the contract partner. Okay. And naturally, the deliveries in their chain which must happen before the movement of the good begins, must take place previously, and the others afterwards, so you can easily determine where the good stays or during these contracts by using your concepts. Now let's go over to the only difficulty which we have in a connection with chain transactions. There's only one constellation where there is some uncertainty. What are we to do if the person in the middle of the chain does the transport, because then this person is involved in two transactions, so you can ask the question, which one of the two does he or she want to execute by the transport? And so we have a logical dilemma. And that dilemma can be illustrated as follows. We have B in Berlin in the middle. He has contracts with A in Aachen and C in Calais in France. And so there are these two contract relations. So these are two deliveries. And B does the transport, so the good goes from Aachen to Calais. However, B is involved in two transactions, and so the question is, does he drive from Aachen to Calais in order to execute contract number one? So to take over the good where his supplier offers it to him and brings it to the location where he afterwards needs it. That would imply that the good goes from Aachen to Calais in the first place and later stays in Calais for the second delivery. Or does B transport the good in order to execute only his delivery obligation to C? Then he would start driving from Aachen to Calais in order to that second thing only. So we have then the following flow of the goods as you see it here in the green variant, first variant. The sketch is this one here. So the transport would be equivalent to the first contract. We have Aachen-Calais and then we have Calais-Calais, so that's different. Other constellation. If the blue variant happens, then the delivery with movement is only at the second contract. And then we have an entirely different situation, because then B to Calais has an intra-community delivery, Calais intra-community acquisition. So compare it again. In the first situation, A to B has intra-community delivery and B has an intra-community acquisition in France, although he is from Germany. And he has a second domestic delivery within Calais. In the second alternative, situation is completely different. A to B, Aachen to Berlin, is an internal delivery fully liable to tax. B can get input tax claim, and B does an intra-community delivery from Aachen to France, and the French guy in Calais just has an intra-community acquisition. So that would be probably very convenient. Both of these variants are imaginable and both are logically equivalent. You can't really decide for which view is best. So here the legislator needs to make a decision. How can we solve the whole thing? First, the law doesn't really care. Because, why? Because we have a chain of entrepreneurs. So A to B, if VAT is charged, then B gets it back as input tax refund. B to C, if C is also an entrepreneur, then C gets it back as input tax refund. And even if B to C is C final customer, then C that the tax will have late in the end to be paid in the country of destination in nearly all cases. So one really doesn't actually care. The only thing where the law cares about it, that no confusion arises. So all participants must take greatest care that they view the situation in the same way, so that they don't mix up the green variant with the blue variant of the sketch. So the law sets up some rules to make it clear or to make it certain that no confusion arises. That means general rule is, if there is no clear documentation for any other solution than the transport, is attributed to the first contract in which B is involved. That's the delivery to him. So the transaction, where B is purchaser, acquirer. This can be derogated by a first special rule. B can decide that he wants to arrange it differently, that he wants to undertake the transport in order to perform contract number 2. If he chooses that alternative, he must nevertheless make it absolutely clear to all persons involved that he chooses this variant. So he must hinder others from dealing with the case in a way that contradicts his arrangement. Special rule number 2. There are a few constellations where the law in Germany, at least, and sometimes in the EU, clearly describes how the proof has to be made, or that the proof has been made, that B chooses alternative 2, so that he chooses that the delivery with transport is attributed to the second contract in which he is involved. These rules can be found in German tax law in paragraph 3, section or subparagraph 6a, sentences 5 to 7. You shouldn't know them by heart, and you just look them up when you need them. However, these rules are as follows. Sentence 5 is dealing with cases inside the EU. The transport is attributed to the second delivery in which B is involved, so the delivery where he is deliverer. If B uses a VAT ID number of the country in which the transport starts. What's the logic? So we have A, B, and C here. A in Aachen, B in Brussels, C in Calais in France. These are the contract relationships. B does the transport, so B could now decide if he wants to drive in order to execute contract number 1 or number 2, but he must decide. If he doesn't decide, it's automatically contract number 1. So the good goes from here to there. And now the EU says if he uses a VAT identification number from Germany, then automatically that blocks transaction number 1 from being the one with the movement. Why? A has also a German VAT number. Now imagine the good crossed the border there. Then A would have to declare an intra-community delivery from Germany to Germany because the customer uses a German ID number, and that's impossible. So by using the German ID number, so from the starting point of the transaction, B makes it impossible for A to see the movement of the good there. He cannot declare an intra-community delivery, so he hinders A from creating confusion. So the way is now free for B to treat B to C as the intra-community delivery and intra-community acquisition. So it crosses the border now definitively here, and so the good goes from Aachen to Calais here, and that's it. This solution also can be found in Article 36a of the VAT Directive, and so this applies throughout the whole EU. The next 2 sentences have been added by Germany out of its own initiative, so you can only be sure that this is in Germany. We have again the same constellation. A from Aachen, B from Berlin, and C in Switzerland. B does the transport. And now how can B block A from seeing the delivery with movement at contract number 1? German law says if he uses a VAT ID number from the country in which the transport starts, indeed Aachen, Switzerland. Now imagine you, B, use a German VAT ID number. A has also a German VAT ID number. So that's a clear signal to A that B is not a foreign customer, okay? And you remember, perhaps, I hope, that when it comes to exportation, an export is only tax-free if the customer carries the good across the border, if that customer is a foreign customer. And now, if you use a German VAT ID number, you signalize to the other guy, I am an inland customer. And if I so carry the good away from you, and you are not responsible for the contract, at least if Germany is involved, that automatically means that you are not able to treat your delivery as a tax-free export. So it has again been made impossible for A to see his transaction as a tax-free export, and that makes the way free for seeing delivery number 2 as the tax-free export. So that's now the sketch with B, which B can use without having to fear that A can cause any confusion or misunderstandings. Germany will apply the same logic also if things happen to start in another country of the EU. You cannot have any guarantee that these countries apply the same logic. However, you see here what the underlying idea is. Sentence 7. If you import something from a third country into the inland of Germany, the question is, what can we do now? Then German rule says the transport is attributed to the second delivery in which B is involved if B makes the customs declarations and has to pay the VAT for the importation. Look again to a constellation. A, Albania, B, Berlin, C, Cologne. These are the contract relationships. The movement is Albania, Germany, and it's B who does the transfer. So B can again freely decide how he wants to see the situation. Usually it would be the first one. You remember that basic rule. If there's no clear decision, then it's the first transaction into which B is involved, so where he acquires. However, if A does not do the customs declaration, then 3.8 cannot apply to A. So the place of delivery is then in all circumstances 3.6. So Albania, so for A, there is no need and no chance to see his own taxation transaction as taxable in Germany. So he will never try or never happen to pay VAT for his transaction. So well, he will never be tempted to deviate from B's interpretation. And the way is now free for BC to be treated as the import, so the second. So B can assume that the good goes first from Albania to Germany, and now the idea is if B paid the importation VAT, then B will have to apply 3.8 and becomes taxable under 1.1 number 1, again with the regular tax declaration. And that is what he will already expect under the usual rules, because 3.8 usually applies. Okay, so these are the basic assumptions. So if you want to sum that up, make a list of the contracts, find the sequence in which these contracts must be fulfilled one after another, so arrange them, which contract must happen first, what is the next delivery, and so establish the chain in the right sequence. Find out who does the transport, which contract does he want to execute, fulfill by doing this transport. Mark your sketch accordingly, and then fill in the places where the deliveries before or after the delivery with the movement happen. And so the only thing you really need to know are that there are rules about the case where somebody in the middle of the chain organizes the transport, and basic rule and default rules, special rules keep them in mind. These were the 2-3 things which I mentioned just now. Sometimes you have some bureaucratical problems resulting from the whole thing, and that is sometimes expensive. And just to illustrate what I mean there, A, B, and C, Aachen, Brussels, and Calais, France. You have a sequence of events, Aachen to France, and A does the transport now. Aachen, France is the delivery movement in contract number 1, and the second thing happens in France. So what you have here for B, A has an intra-community delivery, has no problem. B has now an intra-community acquisition, which is taxable in France, although he's Belgian. The second delivery is also taxable in France. So that, together with the input tax deduction in France, means that B now has to fill out 3 lines in a French tax declaration, although he perhaps has nothing to do with France apart from this single transaction. That is a high bureaucratic burden, because usually it costs several thousand euros before you register successfully and find a tax advisor in a foreign country of the EU. So that sometimes brings the question along, how can one help B to avoid a tax declaration in that other country? And that is our topic for the next video, which will be about the so-called triangulation rule. So look forward to that. But before we go over to that, I first thank you for listening to this video, and I hope to see you back on the channel soon. Thanks and goodbye.